Well, hello, you trader nerds. Welcome into a terrific Tuesday. And real nerds never trade alone. They trade with their fellow nerds like 12547, like Connor, like DB, like Darmesh, like Don, like Dwayne, like Ed, like Frank, like Gabriella, like Gary, like Glenn, like Hal, like Jason and John and Kevin and Lee and Matt Jollywally and Matt G and Mo and Pinks and Ricardo and Robert and Sean and Stefan and Stephen and Victor. We are all together and we are not giving up after the slaughter that we experienced yesterday. And my promise to you, ladies and gentlemen, is this: we will never go through that again. No, we will never go through that again. Uh we're adjusting the plan, y'all. We're adjusting the plan. The market has recovered some today, 1.66% up. Let's see what the big green monster looks like. Big green monster says that we are just about over, believe it or not, over bought. Isn't it amazing how this thing works? I mean, even in the fall, I mean, we caught the low there. I mean, I don't know how this thing works. I have no idea. And then it disperses around and the 50% line, then it goes up. And then, of course, it experiences a little bit of resistance here and it's a little bit overbought. So we shall see. We may anticipate a little pullback back into this area, but it wants to fill this gap as well. We know the conflicting forces that work upon the market, and we have no idea what the market's going to do. And I'll just say this, y'all. I mean, the market, it wasn't the market move that got us, it was the volatility jump. And if you look at the VIX yesterday, just incredible. The jump in the VIX all the way up to 60 something was just more than a man could take, actually. And I will never, listen to me, I make this promise, I will never be caught with my hand in that cookie jar again. So this is called the Great Reset. And the Great Reset is what we're going to do. We're going to reset the plan. This plan, ladies and gentlemen, worked well for a long, long time. It did from August of 2021 to the present. And what I should have done is done the circuit breaker and closed everything, is what I should have done. And I did do that pretty much yesterday, pretty much closed out of just about everything. But the great reset is going to focus on hedging and hedging only. And you know, the 111, 112 was a great trade for us. And I know a lot of people will say, Bobby, you're abandoning the plan after one little blip in the market. Yes, I am. Yes, I am. And I know there will be some that say, don't do that. But I'm never going to go through that again. I will never go through that again. So what my plan is to make the hedge the income trade. Let's make the hedge the income trade going forward. And then let's put our money into Bill. Let's uh let's get a nice stable return. And when those Vomageddon moments come up, we'll double our count or triple our count or quadruple our count. I think that's the plan going forward. And you may disagree with me. And if you're on the 111, 112 train, and feel free to get off because I will never go through that again. So what we're going to do is we're going to do the Black Swan hedge and we're going to do it in an income version. All right. We're going to do it in an income version so that we can make this thing very, very strong and very resilient. So when this happens again, now here's the thing: when could it happen again? It could happen this week. I mean, if the Iranians bomb the Israelis and we get a fight over there, I mean, it could happen again this week. So we need to make sure that we are ready. But first, we've got to have the plan in place. So let's just go through the Black Swan hedge and what it does. You sell 3 short puts at approximately $3. You buy 5 long puts, 50 points below the shorts. Now, to start your entire campaign, you can purchase 4 of these things straight outright at 120 DTE, identically on a day when the market is up, like today, you could start it. Subsequent tranches must be equal to or greater than 60 days to expiration. And then the factory campaign, once you've got these things going, then you sell additional short puts on the day when the market is down 0.4% or after 2 consecutive down days. And you are still hedged, believe it or not, when you've got 15 shorts and 20 longs. And use the BSH calculator to buy the puts when the entire trade can be put on at a break even or a slight credit. So this is what we're going to do going forward. Then when we buy those loans, we're going to we're going to sell new puts as soon as those are filled, or you can do the same thing. Wait for 2 consecutive down days or a down day 0.4% or more. You can do that. The important thing to know with the hedge is if 24 days have passed and no additional black swan hedges tranches have begun, it may be necessary to purchase outright tranches or at least the longs to keep the campaign going. It is permissible to diagonalize the outright BSH tranches so that the shorts are in a longer expiration than the long, so that the entire trade can be placed for break even or small credit. So we can do that as well. All right. Short put harvest the short puts at 20 cents or when they reach 14 days to expiration, whichever comes first. Alternative harvest the short puts along with an equal number of long puts at 20 cents or less. And then here's the thing that I made a mistake on yesterday is I increased my sizes not when it was possible or not when it was opportune. I increased it at a time that I shouldn't have. So all of the stuff that is in the plan about strangles, screw strangles. All of the stuff that is in the trade plan about 111 and 112s, screw the 111 and 112s. Hey, fool me once, shame on you. Fool me twice, shame on me. I'm not going through it again. And I don't expect you to go through it again. So what we're going to do is we're going to build an army. Listen to me, an army of thousands. Yes, Beth, say it, army. Say hallelujah, Beth. Beth's even saying hallelujah. We're going to build a army of trades that are going to, and during the next apocalypse, during the next whatever Volmageddon, are going to increase our net licks significantly. Now, before then, we may be treading water. Okay, we're up $100 this week. We're up $200, but I will never go through it again. And here's the thing: someone brought up this point yesterday, and I think it really is kind of neat. Let me show you what someone said. Volatility events are more common than what you think. And someone yesterday, let's see, where was it? We got a lot of good discussion in our Discord room. We'd like you to become a part of it if you'd like to. Let's see, where was the little thing yesterday that I saw here? Oh, I thought this was good too. The perception of a bad experience. Today it seems bad. In a week, it's not as bad. In a month, it's not as bad. In a year, it's not really, you don't even think about it. So we're going to be fine. But I saw this little comment yesterday. Where was it? I put it on here. I thought it was a comment. Yeah, here it is by Kurt. Kurt said, just a thought. This was yesterday. How about focusing on accumulating tranches of the Sweet Bobby hedge and putting extra cash in CDs or T-bills? Long stretches of low returns, punctuated by occasional huge profits and very low risk. Why bother with any of the risk of naked options? I agree. I agree. And so that's what we're going to do going forward. Now, do I have the plan finalized yet? No, I do not have the plan finalized. But I promise you, every resource available to me will be put into this plan, and we will make this thing work. We're never going through this again. We're never going through it again. Because it wasn't the move that got us. Remember, we used to say, oh, a 20% move, how we're going to do? Oh, if it's 20% move, we'll worry about moving to Mexico anyway, moving to Canada if it moves 20% down. We were like, oh, man. But here's what happened with the VIX. Here's the VIX for the year. Look at this. Boom. Now, the black swan hedges will probably pop up here. The black swan hedges will probably pop up here. They'll probably do it and all during these things. So these events are becoming more and more common. And here's my thought process. Just my thought process. Y'all, I believe that we're going to have volatile times for the remainder of this year because we've got a very contentious election coming up. And half the people hate the other half, and this half hates the other half. And these people are, blaming this and, end of democracy, into this, whatever, blah, 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 blah. And everybody's fighting and upset. And I think that we're going to have more volatile days ahead. That's why I'm saying, hey, those of you that want to continue with the 111, knock your freaking self out. I say do it. Hey, if that's what you want to do. But I'm telling you this, old sweet Bobby right here is never going through what I went through yesterday. I'm never going through that again. It's just too painful. It was too painful. And there was nothing I could do. There was nothing I could do but be a sitting duck. And it was one of those things that really, y'all, Yeah, this is a big shift. But thing is, in a big bull run hedge, will it be a dead investment, specifically with lower interest rate? Yeah, that's true. Those will be doing make your trading great again. That's right, Matt Jolly Wally. What happened yesterday was an outlier. What is the probability a similar event is going to happen again? I don't know, Robert, but I'm not going through it. I can tell you that. I'm not going through it again. Um, I think that what we have will more than replace what we lost if we'll do it and do it right and build it up slowly and surely. So as I build it up slowly and surely, y'all are going to build it up with me. But what we're going to do different this time is we're going to take all the analysis tools that are available to us and we're going to make sure that we don't over hedge like what I did. Selling those 33 puts just because I bought 55 was stupid. And I didn't know it at the time because I was like, well, I just bought 55, selling 33 is nothing. And that cost me a lot of money. And I'm just not doing that again. I'm not going through it. And we can say that it was an outlier. And hey, that's fine. But I can tell you this sweet Bobby Gaines is not going through it again. I am not doing it. I am pivoting. And I know other people will say it's crazy. Don't pivot from the strategy. The strategy was great. The strategy was this. And it's like, we talked about yesterday. Everyone has a plan until you get punched in the face. And I got punched in the face, and I'm not taking another one. I can tell you that. I'm not taking another one. So the next time that this thing, the SBH exit strategy for profits when the next vol spike happens, you're exactly right. John, that's good. We need to define in the new plan how to know when to get out, right? And it's kind of like Mike yesterday. He was shaking like I was shaking back in 2020. Y'all, we can do this. And I hope y'all are on board with me. I hope you're sitting there thinking, okay, this is good. Let's do this. But what we're also going to do is we're going to do this in a way that we make income. Okay. We're going to do this in a way and we're going to make income. And by focusing on the black swan hedge, y'all, then we're going to be more or less focused on ES rather than MES. Let me tell you, that was another learning experience that I had yesterday. And let me just talk to y'all. Let me quit sharing screens and stuff. Let me just talk. Let's just talk. What we had yesterday was, God, what was I saying? Yeah, how to get out when everything is crazy trying to close. Oh, what I learned yesterday was you could not trade the micro E-minis. MES, y'all, it was the bid ask spreads on those things were wacky, wacky, wacky. And I was trying to get out of those positions. It was difficult. I am basically saying, now this is going to be hard for some of you who are in smaller accounts, but it won't be because we're going to be doing the black swan hedge. I'm basically saying that the micros in uh, a Volmageddon situation that we had yesterday is basically untradeable. Basically untradeable. So we will be focusing our hedges in ES. And if you've got larger accounts, you can certainly do it in SPX. But that's what we're going to do. That's exactly what we're going to do. And we're going to more than get back anything that we lost yesterday. Just hang with me a little bit. I say, hang with me a little bit. We're going to redo the strategy. We're going to redo the plan. We're going to have all the exit strategy in there. We're going to have how to get out, even though your hands are trembling and you're up, 200%, you're going to be fine. So everybody's going to be fine. So I just want you to know that. And I'm sorry that some of you experience, huge losses. I mean, someone told me yesterday, hey, I lost $500,000 today. And I'm like, wow, that's a big meatball. It's a big meatball. But listen to me. I will never go through it again. I will never go through that again. So are my accounts wounded? Yes, we went through that yesterday. We're wounded. Am I going to start over? Yes, because I'm going to be optimistic about it. I'm going to start them over. We're going to try and we're going to do the best and we're going to see how the new strategy does going forward. So any questions at all? I just want to make sure everybody is, thinking you're on board with the new plan. And look, y'all, if y'all are sitting there saying, hey, I still doing the 111, do it. Do it. I'm not saying it was an outlier. And is that going to happen that often? No. But to wipe out profits that we've had, from August 21 on in one thinking day, it's not worth going through that again. It's not worth going through that. And I'm not going through it. I have made my mind up. And so we will begin to form a wall that will stand the test of time. And when this volatility event comes again, we will be ready. I think you could run it in ES in a $10,000 account, man. Maybe we'll try a $10,000 account, just that size to do one. But I think you can do that in the 3.5s. And the wall will be paid by Mexico. That's exactly right, Alton. We're going to build a wall. We're like Trump. It's going to be a big, beautiful, beautiful wall. It's going to be paid for by Mexico. That's what we're going to do. We're going to have the big, beautiful wall. And I'm kind of excited about it. I'm kind of excited about it. So I want you to lose the money from yesterday. Don't lose the lesson. And I've not lost the lesson. I think some of you are going to lose the money and not take the lesson. The lesson is I'm changing. I am pivoting. And I know what I tell y'all about don't chase shiny objects and everything. It's still doing what's part of our plan. We're just omitting another part of the plan because I ain't going through it again. Just not going through it again. Not going to do it. What's your delta if you only have PDS on there? Oh, yeah, exactly. That's exactly right, Thomas. You need to watch that. All right, guys, good session today. I'm working on the plan for the rest of the day, and I will see y'all tomorrow.